Anish Damania, head institutional equities at IDFC Securities as well, joins in. Anish, hi, morning. What are you feeling about the market? Just 8 days away from the budget, and somehow we've scaled it back to 7,600.
So, just like it was a pre-election rally, maybe this is a pre-budget rally. And liquidity is immense. If you see the QIPs which are coming up are getting oversubscribed a couple of times over. So if I look at it, there is good participation on the equity raising front. So that is a positive news. And as we go ahead, it looks like the bad news flow on Iraq has subsided with oil prices dipping a little bit. And monsoons, they are expecting that July rains will recover, so probably to some extent there is an element of positive spin to that, though a lot of people are started to talk about drought conditions. Having said this, we are going into a pre-budget rally. There are expectations about fiscal consolidation and the bitter pill which one has to take to revive the economy. So that is something which one is betting on, and I would guess that to a great extent that can happen. It has its own. One needs to see how this budget articulates that, and at the same time brings growth to the fore.
Anish, flows are back. This week we've got about 2,000 crore fresh inflows into the cash market by foreign institutional investors. Do you think in the short term liquidity is back?
So liquidity had never gone away. India still remains the most positive or the most favored market, though most of them are fairly overweight on India at this point of time. It still remains the best destination to put money in. So that is what is continuing. I am not seeing that reversing in any quick way, and there are a lot of very large global funds who may not have been able to fully participate into this rally for want of liquidity, and this QIPs and issuances would be a way for them to get chunky positions and participate in that.
Okay. Anish, Maruti yesterday touched a record high. They came out with record dispatch numbers for the month of June. But is the Gujarat issue a forgotten story?
So I think this time, if I look at the Maruti management, they have been very proactive in terms of disclosing even the finer details of whatever is there in the agreement, going and meeting a lot of investors. But the main story continues to remain that of the last 3 years of slowdown in the car segment, probably this year is looking up. So the Gujarat 100% subsidiary, if at all, when it comes up, it's going to be an issue which will be dealt later on. But today people are looking at growth, and in terms of growth, probably if car sales are the first to take off, that's where the attention would be, and that's what has happened. And Maruti's performance has borne it out. Also, what we are seeing is that even if this plant were to come up in the way it is envisaged, it's going to make actually Maruti a marketing company for that, with very little margins for the investment business. Will throw up a lot of cash for Maruti, either to pay dividends or to build a war just to fight competition as time goes by.
Anish, there clearly seems to be a sectoral shift getting in place, and we saw that with the metals rally yesterday. What is it that you make of the metals move, and do you think they could turn out as good short to medium-term investment bets?
So we are overweight the metal sector, with Tata Steel and Sesa Sterlite being our best bets. And typically of a bull market rally, when it is more broad-based, it assumes a better character, and this is what is happening. So to a great extent, most of these companies represent kind of an import substitution in a way, because their prices are determined by global prices. Also what we have seen is that there have been a few dampeners in the economy for the domestic cyclicals, and therefore these stocks get into a little bit better flavor in such situations, and that is what has happened. Besides that, earnings growth is okay. Things are looking okay on a divestment front. Sesa Sterlite looks to be a company which will gain out of that process.
Anish, any specific reason why Axis Bank is doing much better than HDFC Bank or ICICI Bank? Axis Bank is one bank where FI limit is frozen, yet the bank is moving up, or the stock is moving up.
So I think when I speak to a lot of domestic funds, they still find that Axis Bank offers good value still, despite the large run-up, and it seems that their issues about NPLs, etc., are a lot lower than what the market thought earlier. So it is getting re-rated as a private sector bank. Other banks' valuations are 3.5 times. This is just about under 2 times price to book. So there is still some scope for Axis Bank to move up, and domestic money is also getting into likes of Axis Bank.
Nasdaq is at a multi-year high, which means the outlook for global technology stocks will be rosy. What does that mean for Indian IT stocks?
So in the short, in this term, what we have done is we have upgraded from an underweight position in IT to a neutral, and our position reflects clearly that it's not so much of a global recovery, but it's the near-term factors like the monsoons and the oil prices which have prompted us to make this upgrade. Secondly, IT stocks have not performed, underperformed massively in this whole rally, and the valuations have become really very attractive. So the Infosys, HCL Tech, and Tech Mahindra all were under 13 times, and TCS were trading at market valuation. So what we thought is that there could be this rotational money, which liquidity is still good, and therefore by rotation money will come into the IT stocks, and that is what has happened. So if you'll see, IT stocks have done 15% move, and we feel that this kind of trend will continue for some more time. So IT is where we upgraded from underweight to neutral.
Anish, you mentioned that you expect that the divestment number for this financial year will move up. So optically that's good news, but that also will ensure that paper supply from the government stable will increase.
Yes, so not only the government stable, but even the private companies have lined up a huge supply of paper plan. So there is one section of the market which feels a little concerned about this kind of paper supply. But let me take you back to years in which paper supply has been good. I've seen whenever paper supply has been good, markets have done well during those years. 2010 and 2011 are classic examples of those 2 years. So one needs to really look at how the liquidity is and how you harness it. Secondly, when you look at the supply of paper, it is mainly going towards deleveraging as far as the corporates are concerned. And our small exercise on a sample of companies which are highly leveraged, if they were to issue paper today, in fact, with every higher dilution or higher amount of paper issued, their EPS moves up. So which means at this prices, it is EPS accretive than dilutive. So which is going to be good news for the investors, and hence they'll put in money into these stocks. So I think supply of paper will create its own demand, and it's going to be positive rather than negative.
Anish, where is value still left in this market? Everything and anything is up 40 to 50%. Where are the low-hanging fruits left in this market?
So I think what we need to capture is now where the growth will be, and where that growth will pare down the debt and repay that and convert that debt into equity. So in case of leveraged stocks, where we are expecting, let's say, buoyancy in its core businesses, for example Jayaprakash, where over the next 2 years one is expecting buoyancy to come back in its core businesses, which will help them repay their debt. The debt is about 60,000 odd crores, and the market cap is 16,000 crores. So every repayment of their debt will add to their equity value, even if EV were to remain, say, stagnant for this company, and which is why one of the reasons why we like those companies where the deleveraging story comes with a cash flow generation story as well as we go forward.